Friday, the 27th of October. Welcome to Business Morning. Welcome our viewers here in Nigeria and around the world. I am Adeosun. Let's get the show started. We've got 1 hour packed full with a lot of stories making the headlines. But let's get started with the latest from, of course, the country's political capital. It is the Adeosun's roadmap for roads. The Buhari's cabinet on Thursday approved the finance minister's new Road Trust Fund structured program in partnership with the Power, Works and Housing Ministry. The new deal is a form of PPP, what you call the public-private partnership, to fast-track the provision of federal roads across the country by allowing private sector operators to collectively fund these projects in exchange for a tax credit scheme. All the breakdown we'll have for you next week. But this deal, therefore, complements the government's roads budgetary allocations, which, of course, is not sufficient. The finance minister says some companies have identified the roads they wish to reconstruct and are organizing their funding. That's on one side. Stick with that for next week. Then, of course, it's going to be very busy next week as well, as we wrap up the month of October and we step into the final 90 days of 2017. The budgets and borrowing of the Buhari's administration. The government looks ready to meet the October 2017 deadline for the submission of Budget 2018 proposals to the National Assembly. The cabinet yesterday approved the draft document of 2018 appropriations, and sources indicate that President Buhari will make a formal presentation to the National Assembly live on Tuesday next week, the 31st of October. Meantime, the administration faces some public scrutiny and discussions around the final round of 2017 borrowings by the administration. $5.5 billion is what has been announced will be borrowed in the final quarter of 2017. We have about 60 days left. Will the administration make it good to do these borrowings in the final 2 months of 2017? The finance minister has been speaking about that, as well as other public officials around the finance, the budget ministries. We want you to be on top of this with us next week when we come back. Very quickly, yesterday it was a raft of earnings from companies across the sectors: consumer goods, industrial goods, the banking, financial services sector. Despite a strong buying, investors bought 11.7 million shares, worth of shares of Nigerian stocks yesterday. The market, however, went down about 0.3%. The market cap lost about 37 billion local currency. So the market was still in a very strong mood, despite some of the good and not so good earnings that you already have on the radar. That's where the market was. Red on Thursday, the second to the final trading day. In terms of the daily trading average, that was quite decent. 356.8 million ordinary shares, naira value, total transactions, all in the green, meeting what our daily average really was. I'll flip that away and take us through the 5 main sectoral performances, and you see where the market bled yesterday. The industrial goods managed 1%, insurance down by 1.16%, oil and gas 0.5%, banking lost 0.24%, and consumer goods a negative 1.04%, despite those gains reported by 3 of Dangote's companies listed on the market: the sugar, the flour, and NASCAR, the second salt refinery company on the market within the Dangote Industries Group. Okay, let's go to the fixed income and very quickly see these numbers very quickly. And you can see the treasury bills and the bond market, the secondary trading via the FMDQ OTC securities exchange. That is the summary of the 4 most actively traded treasury bills. And on the flip side, you find the bonds, 95.27 billion, the secondary window. The result of the FGN October DMO auction, we're expecting that out today, and we'll let you have it as soon as we got it. Okay, we're done. Let's get on with the big story around Wando's regulatory tussle with the Securities and Exchange Commission and the primary listing of the shares on the Nigerian Stock Exchange. But let's kick off this conversation with the Chief Financial Officer of the company, Femi Adeyemo. Let's take a look at some of the financials of this energy trading company and see what the future looks like, looking from the books, as you want to put it. Good morning. It's good to have you.
Morning.
Thanks for coming. Very simple question. What is the state of Wando's financials as we speak?
Over the past few years, the past 2 or 3 years, we've had a situation where Wando had declared losses. But in reality, the losses that we declared as a company were losses that were as a result of us effectively cleaning the books. There were a number of assets that we were carrying, which as a result of the performance of the oil industry, required us to reevaluate the value of those assets. The reevaluation of the value of those assets meant that we had to impair those assets so that they were carrying a value that reflected what, at least based on the prevailing oil prices, what reflected the earning potentials of those assets. But since the beginning of this year, I can say that we have turned the corner. We rather modestly, but we have recorded profits for the past 2 quarters. My expectation, all things being equal and assuming there is no other shock to the system, is that performance is going to continue.
One newspaper article in May this year, when your first quarter numbers, the first paragraph says, "The storm appears over for one of Nigeria's oil giants, Wando PLC." Do you agree that the storm is over?
Based on the things that I can see today, yes, I do not expect any other unpleasant surprise. But again, we're in a system where quite a number of the things that affect the value of the company or the performance of the company are not necessarily within the control of that company. The economy of the country, the sabotage that happened, that was happening in the Niger Delta region, the oil prices, all of those things are things that, whichever way they swing, could affect positively or negatively the performance of the